A man sold stock on December 20th at a $400 loss and bought it back the very next day inside his IRA. The IRS didn't just delay his deduction, it destroyed it permanently and put that decision in writing for everyone to read. That's the wash sale rule at full power, and today is the deep dive we promised. What really counts as a wash sale, the spouse and IRA traps, the honest 2026 answer on crypto, and how to harvest losses without ever touching the tripwire. 30-second refresher from last video. Sell a stock or security at a loss and acquire a substantially identical one within 30 days before or after the sale, a 61-day window, and Section 1091 disallows the loss. No deduction this year. Usually the loss folds into the basis of your new shares, so it's deferred, not dead. Usually. Hold that word. Now the deep dive details, starting with what counts as acquiring. It's broader than buying shares. The statute's own words, acquiring by purchase or entering into a contract or option to acquire. Sell the stock at a loss and buy a call option on it 3 days later. Wash sale. And watch the quiet one, automatic dividend reinvestment. If your account auto-buys even a few shares of the fund you just harvested, those reinvested shares can trigger the rule all by themselves. What does substantially identical mean? The same stock or the same fund, identical, always. A different company's stock, even a direct competitor in the same industry, generally is not substantially identical. Selling one airline and buying another usually stays safe. The genuine gray zone is funds, two index funds from different companies tracking the same index, are a question the IRS has never answered cleanly. That specific move, run it past a pro. And here's where every one of these adjustments gets reported. This is the real Form 8949, sales and other dispositions of capital assets. Every trade, line by line. When a wash sale happens, the disallowed amount is entered as an adjustment right on this form. Brokers usually flag same account wash sales on your 1099-B, and your return has to carry the adjustment through. This is the paper trail that has to match. The deferral math, so you see it's not always a catastrophe. Let's say you bought at $1,000, sold at $600, a $400 loss, then rebought inside the window at $650. The $400 is disallowed this year, but it's added to your new basis. You now own the stock with a $1,050 basis instead of $650. Sell for good later, and the benefit finally shows up. Annoying? Yes. Fatal? Not in a normal account. Trap 1. You can't outsource the rebuy. The rule isn't fooled by whose name is on the account. Publication 550 says it flat out. If you sell at a loss and, within the window, your spouse buys substantially identical stock, or a corporation you control does, that's a wash sale. Same for your own other accounts. Sell in one brokerage, rebuy in another, still washed. And remember from last video, brokers can only auto-flag wash sales inside one account. Across accounts and spouses, catching it is your job, but it's still the law. Trap 2, the one from the opening, and the worst outcome in this whole area of law. Revenue Ruling 2008-5. A taxpayer sold 100 shares, $1,000 basis, sold for $600, then had his IRA buy the same stock the next day. Ruling, the $400 loss is disallowed under 1091, and, here's the killer, his IRA's basis is not increased. Inside an IRA, there's no basis to fold the loss into. The deduction isn't deferred. It is gone. Forever. Never, ever repurchase a harvested stock inside your IRA or Roth. Now the question half of you came for. Does the wash sale rule apply to crypto? The honest answer, as of the 2026 filing season, the statute, by its own words, covers stock or securities, and the IRS classifies crypto as property. No law extending the wash sale rule to digital assets has been enacted. So today, selling a coin at a loss and rebuying it quickly is not blocked by Section 1091. But hear all 3 warnings before you touch that. Warning 1. Crypto ETFs are not crypto for this purpose. An exchange-traded fund is a security, so the wash sale rule fully applies to it. Warning 2. Congress has proposed extending the rule to digital assets over and over since 2021. This is exactly the kind of rule that changes, so verify before you rely on it. Warning 3. Even where 1091 doesn't reach, the IRS has broader doctrines for transactions with no real economic substance. Mechanical same-second sell rebuys done purely for the deduction invite exactly that scrutiny. Harvest, yes. Get cute, no? Your clean harvest playbook. 1. After any lost sale, mark the full 61 days, 30 back, 30 forward, and let nothing substantially identical in. Not you, not your spouse, not your IRA, not the dividend reinvestment robot. 2. If you want to stay invested, buy similar but not identical the same day. That's legal and normal. 3. Turn off auto reinvest on any position you plan to harvest a month ahead. 4. In February, check the 1099B for wash sale flags and make sure your 8949 matches. 5. Keep the basis add-back records. That deferred loss is your money. Quick recap. The wash sale rule disallows a loss when you, or your spouse, your controlled corporation, or your other accounts acquire the same or substantially identical stock or securities, or even an option on them, within 30 days either side of the lost sale. Normally, the loss defers into your new basis. Inside an IRA, per Revenue Ruling 2008-5, it's destroyed outright. Crypto itself isn't covered as of the 2026 season, but crypto ETFs are, and the law keeps trying to change. Escape routes, 31 days, or similar not identical. One quick note on who makes this. The tax breakdown is prepared by a tax accountant with over 15 years of public accounting experience, and this video is checked against the statute itself, IRS Publication 550, and Revenue Ruling 2008-5. Educational always. Advice for your specific situation, never. Bottom line, the wash sale rule has one message. If you want the deduction, actually let go of the position. 61 days of patience, or a similar but different replacement, keeps every harvested loss alive. Get impatient, especially inside an IRA, and the tax code doesn't just delay your deduction, it can delete it. Next in this series, dividends versus capital gains. Why two investors with the same portfolio can pay wildly different tax. This is general education, not advice for your situation. Talk to a pro. Subscribe to the tax breakdown for taxes in plain English before you file, not after you overpay.